if you want to grow your small account or double it, then I suggest that you use this entry strategy that I'm going to be sharing with you right in this video, right? So what do you have to look for in here, right? So we're just going to be using moving averages, and we are going to be combining that with a little bit of what of stone flips and a little bit of what order blocks, and this pullback strategy that I'm also going to be sharing with you is actually going to be the best that you can use, right? So if you want to grow a small account, it means that you have to get multiple entries, right? So right over here, we're just going to be using our 5-minute time frame for our entries, right? So that's why we're using the 50 moving average for our entries, because we will get more chances to enter, right? So first of all, what we have to do, we have to determine the trend, where the market is where the market is going, right? So how do we determine the trend when you are using when you are using moving averages, right? So first of all, there are two main ways that we can do this, right? So first of all, let's take this for example over here, right? Let's just start over here, right? We created what high low, high low, and high low, high. So we know that what we're in an uptrend, so which means we're just looking for our bullish setups. We're looking for our buy setups only, right? So you can enter with this strategy that I'm sharing with you. You can enter using the 5-minute or the 15-minute time frame, or even the 1-minute time frame. But 5-minute and the 1-minute time frame will work best because we want to grow a small account, so we have to get multiple entries. The 15-minute time frame doesn't give you that much entries, right? So besides looking at the price action point of view to know your market structure, to know your trend, you can also look at the moving average crossover. So if the 50-200 crossed over for what? For a buy, right? Which means that we are going to be looking for buy setups only, right? So this over here, so I forgot to mention, this is the 50 moving average exponential applied to close, and this is the 200 moving average exponential applied to close. Again, they're just the same, right? But the difference is only in the period, right? So over here, right? So now that we know that we are in an uptrend, what are we going to be looking for when we want to enter, right? So for our entries now, we're going to be marking what? We're going to be using the 50 moving average for our entries, and a little bit of what? Order blocks or support and resistance, right? So over here, firstly, we are only going to be entering if the market doesn't break past the 50 moving average, right? Like what it did over here, right? Right over here, it first broke and came for a retest, and it respected, it continued going down. Want to enter if it breaks a little bit, then shows that it's respecting, unlike if it continues going down a little bit over here, right? So we right over here, and here we don't have our entries, right? So our first entry will be somewhere over here, because over here we didn't have a pullback to the 50 moving average. So right over here, what we're going to be looking for, so we are going to be marking out this previous resistance over here, right? That was broken, right? So over here, this previous resistance gets broken, then we've got a pullback to that area. It's now acting as a support, right? So we've got two supports over here, right? So that's when we enter, right? So we can just enter when the market pulls back to the 50 moving average, just to make things a lot more simpler for us, right? Just wait for a candlestick confirmation, then we enter, right? So right over here, when you form this something like a morning star over here, you enter. So which means we enter somewhere on the third candle over here. Right over here again, we've got this green engulfing candle, so you can enter over here. Right over here again, we've got this small doji formation candlesticks over here, so you can enter over here again. The key to growing a small account is getting multiple entries and making sure that you win most, and when you win large amounts of money, and when you lose very small amounts of money, since you already have a small account. Over here, what are we going to be looking for, right? So over here, I'm not using the 200 moving average for my entries today, but if you want me to talk more about the 200 moving average, then you can just comment in the comment section down below. So over here, right, what we have here, right? So over here, we've got breaking market structure at first, and so we've got this low over here. When it gets broken, that's what I'm calling out a breaking market structure. Also have a trend line somewhere in there, and it also gets broken, right? So that's what we have to mark, right? Over here again, we also have this order block over here, because the move that broke the structure started over here, right? So we mark that and drag it to the future, right? So this area over here, this is our areas of interest, because we also have the 50 moving average also, right? And we enter when the market pulls back to that area, right? We've got this candle. If it didn't engulf, but it was a better candlestick confirmation, so we wouldn't have entered here, but we entered here, right? Because we've got a red engulfing candle over here, and also have a doji evening star formation over here. So we did two chances to enter over here, and it's creating sort of like an M, right? So we'd have entered over here, and you would have held that trade, right? So the pullback that we want to look at is a pullback that's something like this, right? So it's continuously giving us a green red candle, green red candle, green red candles, right? So want to see a pullback that's a little bit so like consolidating, right? So let's say we are going down, right? Like in this example, want to see a pullback, say that it's consolidating, just something like this, right? Creating something like an M or ugly M or flag, right? Or you just want to see what your market pulling back, right? So we've got what right over here. When it starts pulling back, maybe we can get what a green candle. Then it's just alternating between green and red candle, right? Just giving us what those green and red candles over there, right? So this over here, that's the type of setups that we want to see, right? So usually after this, these pullbacks just show us that area, that key area of interest that you have marked, that is next, is most likely going to be respected. Unlike if the pullback is just impulsive, right? So those are the pullbacks that we would prefer. We wouldn't prefer pullbacks just like this. These fast pullbacks over here, though other conditions have been made, because we also have an order block here, right? And we've got a 50 moving average over there, but this pullback is too fast because it's showing a large momentum to the upside. So the chances of this being respected were very slim, though it worked out in the end, but the chances of it being respected were very slim. So I wouldn't encourage you guys to enter over there. Right over here, let's now look for over here where there's a clear trend, and we also want to enter in the trending markets only, right? So over here we've got what we are going up, right? So the pullback, the moving average, I want you to see it as a zone. I don't want you to see it only as a one area only, right? As one level only, right? So I want you to see it as a zone. So starting from this area over here and going down and breaking past it a little bit, I want you to consider all that as an area, as areas of what, as areas of interest, right? So over here we marked out our zone flip over here, we marked our zone flip over here, and the market didn't pull back to it. So this was a loss. We didn't, it's not a loss as such because we wouldn't have entered, because it didn't come back to enter to respect that level. Right, then over here we've got something like an order block over here, right, and a pullback close to the 50 moving average, and maybe zone flip over here. So a zone flip also, you don't have to treat it as a single level. So the fact that we have got a zone flip over here and a 50 moving average, we would have entered when you started seeing this doji formation. So I think I would have entered on this candle over here, because when I see that the market seems like it's respecting that area, it doesn't want to continue going down, right? So those are the areas that I want to look for, right? Over here we've got an order block and 50 moving average over there coinciding with each other. So you scalp again, right? So we are just looking for scalping opportunities so that we will be able to grow those accounts, right? So you can also use this strategy on the 1 minute time frame, right? So but for 1 minute time frame, I don't think you'll be able to see your candlesticks confirmations clearly, that you'll just be guessing and entering whenever the market pulls back to the 50 moving average. But that's why I just like using the 5 minute time frame, because we won't be we will get a few more opportunities to enter than the 15 minute time frame, and the candlestick confirmations are a little bit better when we are comparing with the 1 minute time frame. So that's why I like that we use the 15 minute time frame if we want to grow those small accounts, right? So the 5 minute time frame, sorry, not the 15 minute time frame, though we can use the 15 minute time frame, but the 15 minute time frame also has larger losses, right? Because the areas will be a little bit thicker than using the 5 minute time frame. So if you don't know what zone flips are, I suggest that you watch this video next, because it will help you in using this strategy.